Today we're going to be talking about why Schwab's recent underperformance as a stock could be great news for long-term investors. And so before we get started on why this might be the case, I want to make an important distinction when we discuss investing. So when we're talking about investing in Schwab, are we talking about investing with Schwab or investing in Schwab? And the difference between that can mean the difference between if it's good or bad news when Schwab's stock doesn't do so great. And we're going to talk about recently on Schwab's earnings why it didn't do great in particular. Okay, so let's get started. When we're talking about investing with Schwab, we're not talking about buying the stock. We're talking about holding our money as a custodian with Schwab. Now, why is that important? Well, Schwab is one of the largest custodians in the world with over $8 trillion and tens of millions of accounts from investors. And when Schwab's stock comes out and says they missed earnings, the stock goes down, that doesn't impact investors who are just holding their money at Schwab. Now, of course, we want Schwab to stay solvent. We do not want them to go bankrupt, but the stock price going up or down does not impact those who are holding their money with Schwab as a custodian. And so what's the test here? Are you getting statements from Schwab? If you are getting statements from Schwab, you are an investor with Schwab. It does not mean you own the stock. The only way you own the stock is if you go buy Schwab stock. Now, if you go buy Schwab stock, that's a different story. This type of information, Schwab misses earnings, is not great news for a holder in this investment. And we're going to talk about comparing Schwab to other banks and why their performance is going to be different. And that's going to impact how you should be thinking about where your money is held in unexpected ways. And so the distinction, investing with Schwab, means you're getting Schwab statements. They're a custodian that holds your money while you go and invest in stocks, bonds, mutual funds, whatever you invest in. That is different than investing in Schwab or buying Schwab stock. And so let's talk about, as I mentioned in the beginning, why might negative performance in Schwab stock be good news for long-term investors or those that are with Schwab? Well, all the banks recently came out with their earnings, and many of the banks did very well. Now, this is October 2023. Banks have done well recently. Schwab did not. One of the important basically metrics that banks look at is a term called net interest income or net interest earnings. Now, what is net interest income? This is an incredibly important number to know when you're looking at banks or where you're holding your money, because what net interest income means is when a bank takes your money in, okay, and they put it in a checking account paying you very little, they go out and they lend that money. And so they're paying you very little, they go and lend at a higher rate. The difference is their net interest income. And many banks did incredibly well in this area over the last quarter. They have not been paying their investors much in return, but as you've noticed, interest rates have gone up and they've been lending these out at higher rates, so they've had gangbuster earnings. Schwab, on the other hand, is different from those other banks. Their net interest income went down last quarter, and it went down dramatically. Now, why is that? And the reason is what's going to make the difference on where you should think about holding your assets and the motivations within these banks. And so Schwab's net interest income went down last quarter. Why is that? Well, if you think about who are the advisors at these different banks. Well, with Schwab, it is largely, and I'm going to paint with a broad brush here, it is largely independent fiduciary advisors, which means advisors that are obligated to act in the best interest of their clients. And so they are looking at these accounts for their clients that are invested with Schwab. And if they see large cash holdings earning very little interest, and then they see money market options or low risk or no risk options that can earn a much higher rate of return, they're going to move those funds typically. That is a sign of a good advisor. Managing your cash, making sure you don't have too much, and saying, hey, you're earning zero over here in this checking account. Let's move you over here into a money market. You're not taking additional risk. However, you're going from 0 to 5% interest. Now, that is great news for the client or those investing with Schwab when your advisor has that discussion. However, it's not great for Schwab as a company. They are making dramatically less money when you move your money into a money market account, which as an investor with Schwab, that's not your problem. Your goal is not to say, hey, I want Schwab as a company to do really well. Of course, I want them to stay in business, but you need to say, how am I making the best decision for my family over the long haul? It's okay. So we've established the reason Schwab's results compared to other banks weren't as good is because this net interest income number wasn't as high. And the reason it wasn't as high is because the advisors that are working through Schwab as one of their independent custodians are working with their clients to earn higher rates of return on their cash, which is detrimental to Schwab's income, detrimental to their balance sheet. Okay, well, let's go back to all those other banks and investment firms that have been reporting great numbers and higher net interest income. So what does that mean? What is the implication? Schwab's not doing well because their advisors are moving money into higher yielding returns. Well, we can be pretty intuitive here. What that means is at these other banks and these other investment firms, when you see these great earnings, that is great if you're an investor in the bank. But what if you're investment firm? But what if you're an investor with the investment firm or with that bank? What does that mean? Well, if we think about the reason why Schwab has not done well the last quarter is because their advisors are moving the money from cash into higher yielding returning instruments. Again, great for the investor, not great for Schwab because they're not making as much money. With these other banks and investment firms that have done really well, it means the opposite, which is these clients' cash is not moving from lower interest options into higher interest options. Because the reality of it is, at many of these investment firms and banks, their advisor is not a fiduciary. The advisor is not obligated to act in the client's best interest. It doesn't mean they won't. It just means they have a different focus. They're not necessarily paying attention to that. And so when you're looking at investing with a company versus investing in a company, this net interest income is a really interesting number to think about. Because if you have a really high number, it could mean good news for the stock. But what it means if you're investing with that company is keep a close eye on your cash, because they're making way more money on your cash than companies that have lower net interest income, all things equal. And so this is an important distinction, investing with the company or investing in the company. Schwab, again, is I think a really relevant example because theirs went down, other banks went up. That's good news for a certain type of investor. So it's good news if you are an investor with Schwab and have that higher rate of return now, but it's bad news if you own the stock. And so, I'm not making any recommendations on which banks to go buy as much as I'm telling you, as an investor, look at the statements that you're receiving, right? Whichever's in the top right or the top left corner, and say, has this bank or investment firm or whatever been doing really well from a stock standpoint? What is their net interest income, right? Ask your advisor. Has it gone up? Has it gone down? But either way, make sure you're looking at your cash. Make sure you're saying, am I having this work as hard as possible? And keeping in mind that where your money is invested is just as important sometimes as what you're invested in. I hope you found this helpful. And as always, thanks for investing your time with the Personal CFO.